Good evening, ladies and gentlemen. Today is the 28th of September, and as always, we had a tremendous gap up today. And into that gap up, we saw a steady sell off, a little more than 100 points in the first 2 hours of the market. And my idea was that I'm expecting 17,800 to act as a support, but the moment that range starts to break, I want to get as far away from the market as I can because we've been holding that range for a while and into a steadily IV rising environment where later dated options are gaining a lot of premium on both sides. It can be a threat, and we can see a lot of unwinding, a lot of switching around of positions once the range breaks, and I didn't want to deal with that headache. And the market was heavily biased towards the dip getting bought, which is why despite paying a 2-point slippage at exit, I still managed to exit the position at a profit. And a day like this, invariably it could have gone deeply in my favor if I had held on to the trade for a little bit longer. But at the same time, you have to draw a line as to where your view no longer really matters as much as the risk that you are taking. And it doesn't matter, even if it is a small particular risk, you have to draw a line somewhere and say, this is the point where I'm getting out. So I had a trailing stop loss. The trailing stop loss more or less coincided with the fact that I needed some kind of a breakdown below 17,800 for that to hit. It did. We made a good 20-point move, and I exited my position well in time to not have to deal with any kind of a runoff move, because it's been a while since we've seen a down move, but it's very realistic that we can see 150 point move even from what you consider to be a support. So that being said, today was just one of those days where risk management comes first. So thank you so much for watching. I will catch you tomorrow. Have a great day. Bye-bye.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 10:17, and I couldn't record when I was entering my position because I'm back at the office now, back in my cabin, and I had to set up the recording software to work with my setup here. So basically, at the entry, we opened with a little bit of a gap up. Very quickly got sold into quite a big red candle right at the open, and from there we headed lower. And at my entry, I took about 600 point strangle, kept rolling down my calls to deal with the fact that the puts expanded quite a bit. Even though we went back to being flat, the puts were trading much higher than what they closed at yesterday. From there, we've seen a buying, in the entire idea is that this particular area has acted as a support today. And anything below this is dangerous territory. So anything below 17,800 is dangerous territory. And on the upside, the idea is that the recent highs, as long as they hold, I won't have much of a problem with my calls. My calls are a little closer than my puts currently, the way my strangle is structured. And this is to do with the fact that IT is very weak, Reliance is very strong. I think the Reliance strength has come from short covering on people who got stuck in the 2500, 2520, 2540 calls. So I don't see too much further upside in Reliance, but could go wrong. Bank Nifty is sideways for now, and IT continues to remain a week after 2 days of weakness. So as of now, the range I'm strangling is 17,600, 17,850. If we start to head above 17,900, I will take risk off on these calls and move them higher to 18,100. And in case we start heading down, and until we test 17,800, I will be fine with these puts. Beyond that, I will not be in a position to hold on to them. So the Adamani straddle is pricing in about 190 points of risk. So even if we consider 200 points from 17,850, that gives us 1850 on the upside and 17,650 on the downside. So should be more or less one of those days where I don't take too much of a risk. My maximum risk appetite is about 5 points on this, and yeah, we'll keep you posted. So far, looks like the strength that is there in the broader market continues to remain positive. There's buying, and the broader market is in the green. So it's just IT that is relatively weak. And yeah, banks as well. HDFC Bank and ICICI taking a little bit of a hit, but it's being compensated by the fact that Access, SBI, and a few others are doing all right, which is why Bank Nifty is very flat. We'll keep you posted. Time is 10. Okay, one more thing to note, right? So the big up move on Reliance definitely hurting my calls, the 2600 call, but this is completely acceptable because means my shares are benefiting, and it's once again always invariably the same story. I will sell covered call and that particular stock is going to move up big time. And yeah, and another thing to note is if you're observing like later dated options, December options, they continue to steadily gain. Today as well, the straddle has put on value, and there continues to be a steady rise in later dated options. So this is generally considered a bullish sign. Like an up move with a rise in IV is considered a bullish sign, but at the same time people have this big fear that at some point we will correct 10, 15, 20%, whatnot. As of now, it doesn't really matter too much to me because most of my positions are intraday, and I'm working with a very tight risk management criteria. And you can see right now, even though we are flat, super OTM options have actually gained today. Put options, all put options, we're flat, almost exactly flat, but put options are trading 5, 6, 7% higher than yesterday's close. Anyway, we'll keep you posted. As of now, things are very much in line with expectation. Continued weakness on Bank Nifty, on IT, and now Bank Nifty also heading towards the day's low. Reliance has taken a little bit of a halt around 2550. We're at the day's low currently on the Nifty, and Bank Nifty is basically causing this at this point. And I have room till here until I do anything. What I'm working with is dip till here, most likely get bought. And the thing is, into the dip also, you can see that there's really not that much expansion on the put option. As of now, people who are short this option are not really covering it. We're at the day's low, but the option is not trading at its day's high. So, in fact, there's a little bit of cooling off in IV of weekly options. So that is keeping me more or less still at my best mark to market. Of course, you have to understand my call was always 50 points closer. And technically at this point, this strangle is centered. But even then, I would have expected a little more of a rise in this put option, given how options have been behaving lately. So all that being said, not too much room from here to here, about 20 points. So if we do go and test and we convincingly break, then I will be getting out of the position more or less. Because once this range breaks, after holding this range for 1, 2, 3 days into a rising IV environment, it's not worth firefighting this. There's no point in doing that. So I would much rather just take the exit there. We'll keep you posted. Time is 10:52. Okay, I gave it enough time. My trailing stop loss is hitting. Looks like what is going to end up happening is that right now the market is pricing in that the dip will get bought. And the dip doesn't get bought. So far, there hasn't been any kind of explosion on the put options. But there is a threat, and we are at the brink of breaking range. We've just broken range, but we're holding right outside that range. So anyway, that's my exit cue. I will get some amount of slippage in my exit that is expected. I'll wait and see if there's an opportunity to re-enter. Otherwise, that would be the end of the day. I'll tell you why exactly I exit. So basically, this particular range, this was the support that I was working with. This has been the range of 1 to 1.5 days almost. And we have finally broken this. There is this immense anticipation that the dip will get bought, which is why you see these puts are not gaining value. We're going lower and lower and lower. Calls are losing value. Puts are not gaining value. And from where I squared off, it's actually 1 point cheaper than that. Of course, I paid a good amount of slippage. But there will be a point when there will be a panic sort of covering on the short puts, which is why I don't want to deal with that. The setup isn't good. After holding range for this long into a steadily rising IV environment, breaking the range is going to be really annoying to deal with, to say the least. One option would be to exit the puts and trail with the calls, but that actually could work out really badly if very quickly we get bought back to 17,850. I will get burnt on that. So I will actually call it a day here. I'll call it a day unless there is another 150 point move from here that shoots the IV so much that once again on a 600, 700 point strangle, I'm able to get very good deal. That's when I will consider taking re-entry, but most likely it doesn't seem to be the case. I most likely will call it a day. And this put is trading at 31. I mean, we made 20 point move from where I exited, but That's exactly what's happening. There's been a steady cooling of IV into the down move, even on the put side. So the market is deeply pricing in that this dip gets bought. That huge bias is building that this dip will get bought. That's about it. Thank you so much for watching. I will catch you tomorrow. Have a great trading day. Bye bye. Also, I'm carrying a lot of these call shots against my positions. So if we do have some kind of a big slide, that should work all right for my position.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.